Hey, good afternoon. Wanted to catch up with everybody. We're the day after the election. We're still waiting for those election results. So by the time you guys see this, we should know which party is going to control the House, which party is going to control the Senate. But regardless of what happens, and regardless of who takes control over those, what we do know is that going back since World War II, the market has traded positive nearly 100% of the time following midterm elections, with the average 12-month return after the election being somewhere between 15 to 17%. Now, we can't say for certain that's actually what's going to happen, but we oftentimes look at historical events like that and historical trends to get an idea of where we're headed. So that's what we're doing right now. We are expecting to see things move in that direction. Now, could it upset to the other side? Absolutely, but still yet, that's the expectation moving forward. So far for the quarter, the end of September through now, the market has moved up in a very good way. We've seen portfolio values start to rebound, and we've seen the market start to rebound in a big way, especially going into the election. So we'll see what happens here after the dust from the election settles. But corporate earnings are still pretty strong. We just saw a lot of corporations report earnings that beat expectations. We've seen record low unemployment. And we're seeing some good information coming out on the inflation front. We do know that the Fed, in their last meeting, left themselves an out. Jerome Powell actually said they could be looking to stop or slow things down. Now, he didn't say it outright, and he didn't say that they absolutely were going to do those things, but he did say we're looking very closely at all the data at this point in time. So I think those are all very good indicators for the market at this point in time. The other thing that I want you to take away from this is that the economy has actually remained fairly strong. Yes, we had 2 quarters of negative GDP growth, right? And then what we saw with the third quarter GDP was a surprise to the upside. We saw better than expected growth for GDP. So we've got record low unemployment. Consumers continue to spend money, and they're spending it on leisure type activities, going out to eat and travel and those types of things. So even though we have inflation, it doesn't seem to really be affecting the consumer as much as what it seems like it should. So those are all good things for the market on a whole. It does hint at the fact that the Fed will likely continue to raise rates. And I think that'll create some short-term volatility. So we'll keep a close eye on this. But for right now, things are looking pretty good, especially going into the end of the year. And I know I've said all year long that I expected to see kind of a strong run into the end of the year. And I think that's what we're watching materialize. We'll see what happens when the dust from the election settles, but I remain very hopeful that we see that. I don't know if we'll finish the year positive. It's still a possibility. There are still those out there that are saying that they expect a positive return on the market this year. I don't know about that yet. But I do know that right now, over the past couple weeks, we've seen a very sharp move in the market to the upside. So we'll continue to watch this. We'll continue to look out for what we need to be doing, and we'll continue to update you as needed. You know, I just recently saw an interesting statistic that showed that if you had invested $1,000 on January 1st, 2012, and you held that to December 31st, 2021, right? And you left it alone, you actually did really well. If you tried to time the market during that time and you missed just 10 of the best days, you saw a 43% reduction in your return. So that is proof that sometimes staying the course and making those small adjustments rather than trying to jump out and time the markets really does work, and it works in our favor. So we're going to continue on that course. We'll make those small adjustments as needed. We'll prepare for things as we learn about them, and we'll continue moving forward with our long-term goals. Again, we thank you guys for trusting us. We thank you for your confidence in us. We really hope that we are meeting and exceeding your expectations in everything we do. If there's something that we need to be doing for you, or you have questions about your specific accounts, please reach out to us and let us know. We're here to help you. I hope you guys have a great afternoon. I look forward to talking to you soon. Take care.